Hey everyone, it's JT. Welcome back to another episode of JT Talks Jobs, where this is the show that teaches you everything that school didn't teach you about job search and career growth. But today is a special episode because of everything that's going on right now with the COVID-19 crisis, the economic crisis. We're seeing a lot of people having concerns around paying their mortgage. And so I was lucky enough to tap into an executive that I know, Todd Palmer, who knows all about the mortgage industry. And he's going to share more about that in a second, and said, Todd, there's a lot of questions around this. How about you come on the show and we talk through it? And of course, he's a complete sweetheart and said yes. So Todd, from the bottom of my heart, and I know all the other WID family members, thank you for doing this. And of course, welcome to the show, my friend.
Hey, thanks, JT, for having me.
So listen, talk to us about what being a mortgage executive is. Talk us about your journey and how you got to where you are today.
Yeah. Wow. So this year marks my 25th year in mortgage banking. I've been through 4 market slumps. When the housing markets are up, I typically am developing and implementing new products and services to help mortgage companies boost their market share and revenues. When you think about it, think e-signature, mobile banking, or even bringing mortgage insurance to other countries. And then when the economy isn't doing very well, I'm helping leaders to re-engineer their operations to make it easier, faster, and cheaper for companies to assist borrowers who are having trouble. It's pretty exciting because I get to work on all aspects of mortgage. And when things like COVID-19 hit, I get to put my skills and experience in overdrive to help people and companies find ways to weather this kind of crisis.
So the one thing I find fascinating about it, though, Todd, is at the speed at which your industry goes from one to the other. It's not a slow process. It's like a switch flips, right?
Yeah. It used to be a real big challenge for mortgage servicers to be able to switch gears, and the industry really is bifurcated. You've got originators who are originating mortgages for people, and then they hand off those mortgages to another company that actually does the servicing. It takes everybody's payments, and so when people look at it, a lot of people are going, well, I don't like that they always change servicers. I went to this bank and I got a mortgage, but then I have to put my payments into this other company. And so, technology today has helped speed up that switch from moving from originating to servicing and helping the customer experience. So we're much more focused on customer service and helping borrowers, particularly when they're stressed out and in crisis.
Yeah. And I really want to get into that next. So, I think for a lot of people right now, if you've lost your job, as of date of air of this episode, we've had 10 million people file for unemployment in 2 weeks. I have to guess that a number of those people have mortgages, and that mortgage is probably one of the biggest payment they make on a monthly basis, right? So you're sitting there going, well, what gives? Like, what do I stop paying? And of course, there's massive fear around what happens if I stop paying my mortgage. What are my options? So let's talk about this idea of reaching out and seeking help. Let's start with the question of, like, when should you start doing that and thinking about that?
Yep. Given that the average American has less than $400 in savings, people are really living paycheck to paycheck, and so they take and are really concerned. What am I going to do? And one of the things that they should do first of all is look to see what is their budget. Where is their assets? What are their monthly payments? What's the cash flow that's going out? The other thing that I say that they need to do is, if they get unemployed, they need to start looking at signing up for unemployment benefits. That's literally, if you are told that you're going to lose your job and it's tomorrow, you need to file for unemployment as soon as possible. And the government has got a number of programs to help us out with that. Now, states are kind of swamped. So that's the first thing. Get your budget in order, file for unemployment.
Mm-hmm. Excellent.
Then,
okay.
Yeah. And then the next thing, and you need to do this pretty much in the same breadth is call your mortgage servicer. These are the companies that you make your payments to. And the reason why I say that, and you don't have to just call, you can go on their website, and a lot of these companies, I'll tell you, Mr. Cooper has this amazing tool where you can go, if you you send your payments to Mr. Cooper, that you can go online and ask for assistance via an online service. But you have to do it soon, because there's a number of things, particularly in the federal government's program, and the program is part of the CARES Act, which is the COVID Aid, Relief, and Securities Act, and we can go into that with the options. But you have to be current or less than 31 days delinquent for you to be able to avail yourself of that product or that assistance. And my other note for this is so you file for unemployment, look at your budget, call your servicer. The thing you don't do is go delinquent on your mortgage unless you absolutely positively have to. You need to continue to make the payment as much as you possibly can, because that will allow you to continue to have additional options with the servicer. It's complex, but those are the 3 or 4 things that I would tell you to do first.
Okay. So if you think you're not going to be able to make the payment, because you're saying that's really important, you want to do all the steps you just said and get in touch with them as quickly as possible to start to talk your options. Yes?
Mm-hmm. Yeah. Yep.
Wonderful. So let's talk about what you can expect, because I think that's the scary thing. Am I supposed to be all sorts of prepared when I call? What do I have to have ready? What should I expect when I make that phone call?
Yep. So you have a number of ways of getting in touch with your servicer, and your phone call right now, I'll tell you, servicers are swamped. They're getting telephone calls from a lot of people, and you might be on hold for a long time. Mm-hmm. And you might have a really quick conversation at first with your mortgage servicer. The agent might be saying, hey, I want to validate your information. So first of all, they have to make sure that they're talking to the right person. They can't talk to your grandmother or your kids or anybody like that. Whoever's on the mortgage, that's who they can talk to. Anybody else, unless you put in writing to the servicer that you give permission, they won't talk to you. So if your wife or husband is not on the mortgage and they call up because you say, hey, can you call the servicer for me?
Sure.
And they get a hold of them, and the servicer says you're not on the mortgage, they will not talk to you. Mm. So it's really to your advantage to make sure that if you are calling, that you're patient and that you are the right person on the mortgage. Okay. The other thing is the servicers are swamped, which means that you are going to get a contact agent who may or may not be completely knowledgeable about everything that's going on. Because they've had to ramp up their call agents, these are people that typically just help people with making their payments, their regular servicing payments. And now all of a sudden they're having to switch gears and handle all these questions around what do I do because I'm delinquent? So they may have a script that they're having to read off to you. Sure. Just because there's thousands of people who are trying to get on the phone and call. Now, so you have to have patience. So, you can also email. You can, in some cases, you can email your servicer. You can send a letter to your servicer, or you can get online. Okay. Now, I will tell you, probably getting online is your first thing. The telephone call, email, and then snail mail. Got it. But you have to get in. You have to get in the queue. You have to get in the queue quickly. Yeah. All right, folks. So if you're hearing that, get in the queue. And if you get on the telephone, understand that you're probably not going to get some sort of expert that knows answer to all your questions. So be patient. Mm-hmm. Great feedback. So there was a couple things. So once you get on the phone, They may ask you for some basic information.
Okay.
Now with the CARES Act and the federal relief, if you have a mortgage that is backed by one of the government agencies, they don't need a ton of information from you to determine whether or not you are eligible for a program. Now, they may ask you for your income information and other documentation because they're going to evaluate you for other programs. So people don't. The reason why I'm telling you to do your homework around your budget is because you'll be able to quickly talk with the agent and say, yeah, my mortgage is this amount, my utilities is this amount, and provide them documentation quickly. So definitely expect that they're going to ask for some information, maybe some documentation for you, so that they can evaluate you not only for the government programs, but for some of the other programs that might meet your needs even better.
Okay, great. So let's talk about that. I know you don't have all the answers, but give us some examples of some kinds of things that may be available to us once we start to give them that information.
Yeah. So I kind of want, first of all, that's a great question. It's a complex question.
Yeah.
And so there's a couple things I want people to know. And the first thing people need to know is the CARES Act, the COVID Aid Relief and Economic Security Act is directed towards those mortgages that are guaranteed or by the federal government's organizations. So if you have a mortgage with Fannie Mae, Freddie Mac, if it's FHA, the Veterans Administration, VA, if it's underwritten by HUD, or not HUD, but by the USDA, so rural development. So HUD actually does, or USDA actually does mortgages for rural communities. Or if you're a Native American and under the Native American Act, acts, and there's a couple different acts there, and that's typically the ones for Native Americans and tribes in the United States, on the continent, Alaska, and for Hawaiian natives. So those are specifically the mortgages that this act is covering.
Okay.
And what that is it's providing borrowers a 6-month forbearance, or up to a 6-month forbearance, with the option of having an additional 6 months of payment forbearance. And so what is a forbearance?
Yeah.
Okay. Let me give you an example. So let's say that you've got $1,000 a month mortgage payment.
Sure.
And you need to defer, you're asking the servicer for a forbearance, or the servicer will say, hey, we can, given what you're telling me, you expect to be working in 3 months, let's just say.
Okay.
And so we will defer 3 months of payments and interest. So that equals $3,000.
Okay.
Each 3 months, $1,000 a month, $3,000. So we'll defer that for 3 months. After that, we will have you. We'll take that amount and say, hey, we'll break it into 6 months, a repayment plan of 6 months, which means $500. So each month you'll have to pay $500 more on your regular monthly payment. So
okay, got it.
At the end of the 3 months, you'll have your $1,000 a month mortgage payment plus the $500 repayment. So $1,500. You'll be paying $1,500 each month for 6 months, and then after that, you'll go back to your $1,000.
Got it.
Okay, so it really is holding off on your payments for a certain amount of time, and then coming up with a repayment plan. Now, that's the most simple forbearance plan that they have.
Okay.
There are so many different permutations to forbearance. You could have a reduced payment. You could have a forbearance plus at the end of that, instead of having a repayment plan, they're going to create they're going to look at trying to modify your loan. So instead of you having to pay $1,500 every for 6 months, you can continue to make your $1,000 payment, but they've changed how long you have to pay your entire mortgage. So it might have been a 30-year fixed mortgage. Now it might be a 30-year 6 month or 7 month fixed mortgage. So there's tons of different permutations. And so that's why getting in and talking to your servicer, what they'll do is they'll take all your information, put it into a model that has a waterfall of all of these different opportunities, and they'll take your information, and that model is there to say, hey, here are all your different options to help you out. So regardless of whether or not you are eligible on the CARES Act options, these servicers still have all these other kinds of products available. So you could be eligible for the CARES Act forbearance program, or the servicer might have, or if you're not, the servicer will have a forbearance plan that's exactly the same thing, but it's part of their typical loss mitigation process. So people, do not worry if you have a federally insured mortgage or not. Call your servicer, have them walk you through what your options are, and they are your first defense on that.
That's awesome. And just so you know, folks, Todd has given us a whole bunch of resources that I'm going to post here towards the end when we get to questions. So don't worry, we're going to have that information. But Todd, so it's encouraging to hear lots of different options. Get in touch with them to see what you're going to qualify for. But I think the next question everybody asks is, okay, how long could this stuff take? You know, what should my expectations be around that?
Yep. So it all depends. And the depending part depends on you, not you, but depends on whether or not the borrower has all their information together. So again, getting your budget, getting all those documents. I would even say, you know, if you have your bank statements, as you're picking through your bank statements to work on your budget, take and download that, make a PDF of that and put it into a folder or something like that, because those are the kinds of things that your servicer is going to ask for. And if you have it available quickly, they'll be able to then put it into the system and make the decision quicker. And because they've got such huge volumes, it's going to take some time. Now, there are regulatory requirements that mortgage servicers must meet, particularly around Freddie Mac and Fannie Mae, in order to have good communications with borrowers. So if you send them something and they're supposed to acknowledge that they've received your information within 5 business days of it being postmarked in their hands. So, you know, sometimes if you're having to mail documentation into a servicer, I would recommend you put it registered mail so that you know when it actually got to the servicer. And if they haven't received it, or if they have received it and they haven't gotten back to you in 10 days, then you should be calling them up and saying, hey, I sent this stuff in. You received it 10 days ago. Are you working on it? Where are we at? You have to be actively engaged. If you're not actively engaged, then you are opening yourself up to risks that you may be denied options that are available to you. And the last thing I want people to do is find themselves in foreclosure or losing their house. Now, that's not an option that people want to think about.
I totally agree. And I think that's exactly why we're doing this, right? Mm-hmm. So what I'm hearing from you is do your homework. Don't wait to call.
Mhm.
Understand this is going to take some time and there will be options, but this is not the time to sit in denial. You know, I've been talking about the stages of grief here. This is
Absolutely.
not what things to sit in denial about, right? If you know this is coming, you need to get on it now, is what I'm hearing from you.
Absolutely. And I think that people should, because of COVID, people need to even be more active on this. And the reason why is because the last thing you want to have happen is you delay on this and, God forbid, you or one of your family members gets sick. You can't take and do this stuff from a hospital bed. And if you're in the system and you're working with your servicer and something happens, they'll understand. Now, they're in the business of trying to keep you in your house. Now, they're having a tough time of it. So be patient. I know it's stressful for everybody. Be patient. You also have to participate. If you participate in that, you will get assistance.
That makes sense. I mean, it's just good faith effort, right? You really made the effort. You weren't delinquent, because when they're sitting there looking at people and seeing who really tried hard and who, you know, was lazy about it, that really could backfire on you.
Yep. I also want to make a point for those people who may be in foreclosure or starting through the foreclosure process. These are people who aren't active. They're actually been delinquent. There is a moratorium for those folks who are covered under if they have a federal guaranteed mortgage. You know, again, Freddie, Fannie, HUD. Actually, it's FHA, VA, and the Indian. They have a 60-day relief from foreclosure, and they won't be pushed to relocate. So that moratorium ends on May 17th, but a lot of states have implemented moratoriums for that and for also renters. So the CARES Act has said anybody who's living in property where the owner is getting federal subsidized assistance or has a mortgage with one of those federal government organizations, they can't be evicted. And that eviction is actually 120 days. So, you know, foreclosure 60 days as of 5/17 for people who can't make their rent payments. If their landlord has a government funded mortgage, then they can't be evicted for 120 days, and they can't get an eviction notice for 30 days after that 120.
Okay, that's good to know. Again, folks, don't take it lightly. I know this is all great news, but please don't take it lightly. This is important stuff. I've posted the wonderful resources that Todd has put in here, as well as, and he's so kind, his LinkedIn profile, so you all can get in touch with him directly. But Todd, if you're brave enough, we've got some questions here. Are you willing to take some questions?
Yeah, let me just talk a little bit about the three things. So making homes affordable started back in the 2000 amongst the 2008 housing crisis. It was a federal program, and it helps people find home counseling. So they'll counsel you on your options, and they'll help you to walk you through the process and help you with your budgeting and things like that. I called them this morning, was able to get through to an agent within a couple of minutes. So, and they're really there to help you out. And they help bridge between you and your servicer too. So if you're having problems, you can reach out to them. And their phone number 888-995-HOPE. Or you can go to their website and find stuff. The other one is the CFPB. Now, people may or may not like the CFPB, Consumer Financial Protection Bureau. However, they have a great program and talk about the forbearance programs and how to get help, and has a lot of good resources. So you can take and look at the resources there. And they also, if you're having problems with your servicer and you've tried everything you can do and you're still not getting help and you're frustrated, you can also work with the CFPB to get resolution.
Okay, that's awesome. Such great info. All right, let's put you on the hot seat. First of all, shout out to
Cool.
Laura. Laura says, Todd, do you have any ideas about our investments, like rent, no income, so worried about delving into my investments? So that's like the person rents, right? So it's not a mortgage per se, but if they can't pay their rent, it will end up being totally different?
Yeah. So I talked about, so first of all, I'm not a lawyer and I'm not a financial advisor. So I can only give a couple things in how I look at it for myself. So first of all, the first thing I would do, and I have done, is I talk with my landlord. Say, hey, this is the situation. What is your situation? What's my situation? Now, some people have corporations that are running that they're renting from for their home. Others of us are blessed with having a landlord that we can go to and have these conversations. So there's that piece. So you might be able to hold off on your payments. Every person is different, so you have those conversations. Also, every state and city has different rules right now around moratoriums around rent and giving rent holidays. I know I live in Portland, Oregon, and we have both state and city laws and ordinances around COVID and what's going on. So I think you need to do some education around that. As for investments, I think that you need to go through and run your budget and see where are you at financially, and then make the decision as to what you need given your situation. I mean, I don't know what your situation is, Laura, so I couldn't opine. I know for my situation, I need to make sure that I have cash available in case I have a health crisis, and I need to make sure that I make payments on the things that really, really count. If I'm making a payment plus on my credit card, it's just a lot of stuff. But I think that looking at your budget, having a conversation with your landlord, and looking at the resources and what the laws and ordinances of your area are, that's the best.
It leads into a whole thought process around people that own the properties and how they have to figure out the mortgages on their rental units, right? There's like that whole piece of it too. Can they afford that if people stop paying? It's fascinating. We have an interesting question here though. Somebody's asking, what if I don't have any liquid cash? And seriously, the only thing I have amassed is a 401k. Is that what they'll access? I mean, is there a way for them to even do that? Because most people can take, a small loan out from their 401ks and pay it back to themselves. But, how does that work?
So how 401ks and all of that work is that your servicer will look at, you may provide them information around your assets, and they'll factor that in on what kind of product that you're eligible for in your mortgage. Will they tell you need to take assets out of your 401k? That I would probably say no. Now, is that a definitive no at this point in time? I'm not going to say that. However, and this is just from my thing. Your 401k and my 401k is for my retirement. If I can pay it back and all of that, that's okay. However, that is really my last resort. I would definitely be going and checking with my servicer and talking with my servicer about what options are available to me before I would decide to delve into my 401k to make the payment.
Interesting.
So again, you should get your budget going and have that phone call sooner rather than later, and then make the financial decision later. Right now you don't have enough information to make the call on whether to pull money out of your 401k.
So that makes total sense. And there's another question here that I think is really interesting. Why don't they just take the equity that I have in the home and apply it? So that's an interesting perspective, right? Like, let's say you have $50,000 worth of equity in the home from what you've been paying down already. Couldn't they just reduce your equity and add that back up? Do you know what I'm saying?
Yeah, so there's a couple things. It sounds like the person might have a home equity loan, or a home equity line of credit, and this gets into using your credit card or using your home equity line to make your payments. That's a financial decision. It has risks to it, and if folks have a mortgage, or not a mortgage, if they have a financial planner, I would definitely tell them to give them a call. I'm not one of those people who personally would use my equity line or my credit card. However, those are options available if you're in a short-term situation. If you're only temporary, if you're furloughed and you know you're furloughed for a month, and you literally know you're going to go back to work, I might do it. But if you're looking at it from a long-term perspective, you don't really want to continue accruing debt on something when there are solutions available to you. And there are, literally. Yes, it takes some work it's more work to contact your servicer and get help and provide the paperwork than to write a check on your equity line of your equity line. But you're just putting yourself in more and more debt when you don't have to. You can get a workout with the servicers.
I love it. Great advice. I agree. So somebody's asking, and again, nobody would hold you to this, but how long do you think this is going to go on for?
Wow. I was talking to somebody where I said, can we, is there a mathematical model? Can I apply chaos theory to forecasting how long this thing is going to go on? So the tack that I'm looking at is that the swine flu took 12 to 18 months, and it wasn't as bad. I look at housing market to recover. If it can recover, it'll be 12 to 18 months. If you look at the major recession back in 2008, it took 2008 all the way to 2012, 13, 14 for us to get back onto our feet. It's not saying that every person is going to have 12 to 18 months or more without a job or stressed or anything like that. It's just saying that that's how long it typically takes for the markets to recover from a severe downturn. Now, we're in shock right now. And people have not seen house price depreciation, so their house prices haven't tanked yet because nobody's moving. Nothing's moving. So until we see some market moves, I foresee we're going to be paralyzed. We're in a paralyzed moment. So I think that you have these conversations with your servicer. Now, I'm going to say servicers have got mechanisms set up to help out in just this case. So you can do a 6-month forbearance, and then they'll reevaluate you in 3 months. They'll call you up and say, "Hey, do you really need this anymore?" And if you don't need it, if you're back to work and you don't need it, why stay on the forbearance? That potentially. Or in 6 months, they'll call up and say, "Hey," or you're about ready to finish your thing and you still don't have a job. they'll extend it for another 6 months. And that's part of the federal program. So again, it's your obligation as a homeowner who's got a mortgage to keep actively engaged with your servicer. Don't ghost them. If you ghost them, you're in trouble. So that's my take on it.
Very interesting. So a couple of questions. Folks are wondering, do you think we'll see any break on taxes? Right. So, your taxes as a homeowner as a way to offset that. Historically, what are some of the other things? I mean, I think you just made some interesting points. Home values are hanging because nobody's moving, but very quickly we could see a situation where everybody's underwater in their mortgages, right? If home values plummet, everyone's going to be underwater and not be able to get out of them. So then, some people are thinking, gee, do I refinance and take cash out now before it goes underwater? Like, there's some fascinating things that are going to play out here right now, right?
Yeah. So it's been interesting on the origination side of the equation, because interest rates have just gone through the toilet. The Federal Reserve lowered interest rates to 0. Mortgage interest rates are expected to go down even further, and so a lot of originators are looking at a lot of people doing refi, or so that side of the business. However, they don't have a lot of resources right now because everybody's working from home. so there's that. Plus, there's some things around how much of a lower refinance are you going to get, and are you going to get cash out refinance? Some companies will say sure. Others are going to look at your situation and the market situation and say no. We're not going to do a cash out, or you're going to get a cash out and it's not going to be at a great interest rate. So from that perspective, from refinancing, that's that piece. From a tax break perspective, I have no clue. The government's looking at a phase 4 tax relief, or a relief program for COVID. I don't know. We've already got $2 trillion. I don't know what the next thing is. I have no visibility. From the side of house price appreciation and depreciation in people's home values, we are going to see foreclosures. I'm sure we're going to see people who are stressed, who were stressed to begin with, and who say, I just don't want to be in a house anymore. And there are options for leaving gracefully without going through foreclosure. One is called a short sale. The other one is a deed in lieu. And after the 2008 crisis, mortgage servicers really learned a lesson around how to help borrowers who were unable to hold on to their home for whatever reason. It doesn't have to be, they could have just said, hey, I don't want to have a house anymore. How to help them do that gracefully and without having a huge ding on their credit report, which, oh, by the way, a lot of states and federal governments in this whole thing with COVID have put a moratorium on having your delinquency reported to the credit reporting bureaus. So there's a moratorium on that, and there's a moratorium on fees and penalties. So servicers can't charge people fees and penalties, particularly around the federal programs that CARES is doing.
That's fantastic. That's such great information to know. So one question here is, are there any programs that just lower the interest rate on your mortgage without it necessarily being a refi, which is an interesting concept? Maybe they would just give everybody an interest rate break and leave everything alone, no?
Yeah, so the short answer for that is there are programs today that servicers have available to them to do exactly that. People need to qualify for those programs, and you have to have a qualifying hardship. And a qualifying hardship would be unemployment, a natural disaster, health issues between you or a family member, a death of a family member, divorce, and there's a few others. But those are the main pieces. So again, you go in and contact your servicer. You say, here's my situation. They'll evaluate you for every option. And it may be that the forbearance is going to be the option for you. And then they may reevaluate you in 3 or 6 months or whatever to say, okay, that repayment plan that we were going to put you on, we're actually going to do a modification. Or, I know one of the GSEs, the government-sponsored entities, Freddie Mac, Fannie Mae, those groups, they're actually putting in a program that will allow you to take that whole entire forbearance amount. The example I gave was $3,000. Tack it on all the way at the end of your mortgage, so that when you sell your property in some future date, they'll just subtract that off of your what's outstanding. So there are options, but if you're actively paying and you don't have and you're not being impacted by COVID, you haven't been laid off, you're not going to be eligible for it.
Got it.
They're not going to do this across the board for all Americans.
Sure. Right. Of course. Right. That totally makes sense. I get it. So Amy has a question. She got laid off before COVID hit, but now obviously when you think about all the hiring freezes, so would she then technically qualify for some of this stuff, given the fact that in a way COVID is holding her back?
Yeah. So she definitely should call. Now she may not qualify specifically for this COVID forbearance plan. However, the servicers have an exact same forbearance plan that they've been using forever. So she just needs to call and say, hey, I'm unemployed, because it's a qualifying event, and say, I don't think I can make my payments. Here's my information. Here's my documentation. Can you help me? That is absolutely, she should look at that and call up her servicer and ask for help.
Yeah, these are unprecedented times. I just think you've got it. I think the lesson we're hearing from you today, and by the way, Todd, this has been so helpful, and thank you so much, is that do not wait. Reach out and get help. And you've listed some great resources here. I also want to mention to everyone that I just put in the chat the article that Todd wrote for Work It Daily that literally blew up. It's on our live site around this idea of what to do when you can't pay your mortgage. Lots of great detailed information in there as well. So please make sure that you read and check that out. Todd, this has been, again, so helpful. I think just taking people's anxiety down a notch, giving them information. By the way, also someone is saying, Ted says, usually I fall asleep when I listen to people talk about this stuff, but you totally kept me awake. So Todd, I think that's like the highest compliment you can get, right? But with that being said, I always love to give our guests the final word. So what are your final thoughts as we close out the segment today?
My final thoughts are, there are people out there that are absolutely trying to help you. They are stressed. They have their own personal problems happening. The people who are on the other end of the phone they may not be knowledgeable or experienced in the situation right now, but they're on the phone trying to help you out. They may have their own personal problems that are happening. Their family may be sick. They may be in a call center with 200 other people sitting 2 feet away from them. I don't know that, but they're scared about their own personal problems. So have gratitude, be patient, and know that you're talking to somebody who is exactly like you. So if you're frustrated, take a couple breaths, understand where they're coming from, and take another angle. And if ends come ends and you are getting nowhere, you have done everything you possibly can do, call up your Making Homes Affordable folks at the Hope Line, or check in with the CFPB to say, hey, I don't know what else to do here. And somebody will be able to help.
And with that, my friends, another episode of JT Talks Jobs. Todd, thank you so much. And everyone, thank you for your participation. I ditto Todd's sentiments. Take a deep breath. Understand that we're all in this together. And as long as you're patient and have tenacity, keep your options open, but be proactive. You're going to get there. Okay. You are absolutely going to get there. So again, check out Todd over on LinkedIn. We've posted, I know he's willing to accept your connections and take more questions. Until next time, remember this, no matter what the situation in the world, when it comes to success, if you want to win, you got to work it daily. So keep at it, everyone. Okay. All right. Take care. Stay safe. Stay healthy.